Hi guys, it's Marissa here, and I thought today I would tune in and talk about interest rates because a lot's been happening with interest rates. There's a lot of talk about what is going to happen with interest rates moving forward. And of course, if you are an investor or someone that owns a house or someone that wants to buy a house, interest rates are obviously very important because your repayments on your loan are generally the largest expense you have as a property owner. So it was nice to see that we had another rate cut recently. And what is even more interesting is where the Reserve Bank cash rate currently sits and where they're predicting it will sit in the future. So, I thought that we were at historical lows. Well, we were at historical lows with the current rates that we've got. But to know that the Reserve Bank has reduced the cash rate to 1% is just quite unbelievable, really. But what is more unbelievable is that all of the big banks' economists are predicting that we're going to have 2 more rate cuts by February. So what that means is they're predicting, most of them are predicting another rate cut around September, October, which would bring our cash rate down to 0.75. And then most of them are also predicting a further rate cut in early next year in February, which would bring our cash rate down to 0.5%. I just think this is unbelievable, and it's going to be really interesting to see how it all pans out. But what is clear is that interest rates are going to stay low for some time. So I guess what I'm going to encourage you to do over this period of time, it's really nice to have a bit of extra money in our pockets from the tax cuts that the federal government promised after the election. We also should have more money in our pockets from the reduced interest rates that we're seeing with these rate cuts. So I guess what I'm going to do is encourage you during this time when rates are low and you do have a bit more disposable income, make sure that you're doing something really sensible with that disposable income. If you can afford to maintain your loan repayments where they were at, try and do that, try and pay down some debt, because there will be a point in time where debt will increase, and it also will be, more difficult to continue to renew your interest-only periods on your interest-only investment loans. So try and use the opportunity of the extra cash flow to actually reduce your debt levels to ensure that when interest rates do go up and when things turn, that you are in a better and healthier position. So that's just my little tip for today. I'll keep you posted on how interest rates go, but clearly, we actually have seen a lot of the banks reduce their fixed rates. So there's some really attractive fixed rates out there. But given that rates are looking like they are going to decrease, you might want to stay variable. That's definitely something you should talk about with your mortgage broker and just understand your risk profile. It's always good to have a mixture of fixed and variable anyway. But make sure that you really talk through interest rates carefully with your mortgage broker at the moment and review your loans, because all of the banks are applying different discounts following the Reserve Bank decisions. So that's all I have to say about interest rates. Also, as a bit of a side note, we're definitely still seeing lots of media and lots of interest in the South Australian government's proposed changes to land tax aggregation. I'm definitely against the proposed changes for land tax aggregation. I think it's a bit unfair to change the rules on people that already own the property. If they want to change the rules moving forward for new purchases, then that's fine. But to inflict those changes on people that have followed the legislation at the time of the purchase, I think is a bit unfair. But it seems that many people share my view. So we are going to watch this space and see what happens moving forward with that area. And I'll keep you posted on that too. And just as a little side note, last Thursday night, I was very privileged to be at the National Australian Mortgage and Finance Association Industry Awards, where I was awarded Young Professional of the Year for Australia, which is a great honour. And I think that's possible because a lot of you guys that will watch this have supported myself and my book and my journey, and I just want to say thank you. So thank you so much. That's all from me today. I'll tune in with you again soon. But as always, you can always contact me whenever you want. So please reach out, and I'd love to chat with you. Thanks. Bye.